Welcome to This Explainer. Today we're unpacking a hidden dual crisis that is completely rocking the real estate industry to its core. We're going to break down the massive strategic challenges facing both the agents on the ground and the executive boards, the giant associations that govern them. If you think you know exactly what's happening in today's housing market, well, prepare to have your perspective entirely shifted. Let's dive in.
Okay, let's start by completely reimagining the traditional buy and sell housing market that we're all so accustomed to hearing about. We always picture real estate agents putting up those for sale signs, hosting busy open houses, and closing big property deals. But what actually happens to the ecosystem, the individual agents, the local boards, the national associations, when the market just stops selling? What happens when the fundamental engine of the entire industry grinds to a halt?
Well, here is a major reality check. Agents simply aren't transacting traditional sales the way they used to. A massive 55% of all real estate transactions have shifted entirely over to rentals compared to just 45% for traditional buying and selling. That means the core revenue driver for the vast majority of agents has fundamentally changed shape, and it's leaving a massive, gaping hole in commission income.
Section 1. The Industry in Crisis. To really understand the sheer scale of this existential threat, we have to zoom out to the macro level. We need to look at the money and the strategic challenges facing the real estate associations themselves. The industry makes absolutely massive capital investments in recruiting, onboarding, and training agents. So when agents exit the industry in record numbers because sales are low, the financial losses are catastrophic. And it's the local city or, county associations that face the most acute hits. Why? Because their dues are typically much higher since they include access to the multiple listing service, the MLS. When an agent leaves, that huge chunk of local revenue just vanishes overnight.
To put that into perspective, just think about this number, $15 million. TREB, the Toronto Regional Real Estate Board, which happens to be the largest city-level association in the entire world, has taken a $15 million hit to their top-line revenue in just the last 2 years. This is publicly available information, folks, and it is a massive, bleeding financial blow directly caused by agent churn.
And the bleeding doesn't stop at the local level either. Let's jump up to the federal level. $40 million. The National Association of Realtors, NAR, the largest federal-level association globally, lost a staggering $40 million last year alone. The sheer velocity of this top-line revenue destruction across the entire ecosystem is just breathtaking. And it really highlights exactly why associations need to do absolutely everything in their power to ensure agents don't exit the industry.
So these associations are caught in an impossible vice. On one side, you've got crashing top-line revenue from agent churn. On the other side, there's an absolute inability to raise fees to make up for the shortfall. Because of the current economic climate, most associations haven't been able to implement cost-of-living adjustments to their fees for the past 5, even 10 years. The result? They are completely financially squeezed. They're left with almost no wiggle room to deal with the inevitable brutal shifts in the real estate cycle.
Section 2, the agent survival pivot.
Now let's zoom in from those massive, multi-million-dollar association deficits right down to the individual level. The cascading pressures crushing the everyday real estate agent right now are intense. They're caught squarely in the middle of a brutal housing and inflation crisis. Their revenue is dangerously low because transaction volumes have plummeted. Meanwhile, their operating costs, things like marketing, licensing, gas, software, are continuously increasing thanks to inflation. And this financial strain translates directly into an immense mental health crisis. In fact, research shows that a lack of financial well-being is literally the #1 mental health pressure facing real estate agents today.
It all builds into a perfect storm. National real estate sales are currently sitting at 20 to 30-year lows. But when you adjust for population growth, the data gets even scarier. On a per capita basis, real estate sales may actually be at the lowest levels in recorded history. The pie hasn't just shrunk. Relative to the huge number of hungry agents out there, it's practically a cupcake. This stark reality underscores exactly why agents are struggling to just survive off traditional commissions alone.
And the direct consequence of those historic lows is pretty alarming. At least 60% of real estate agents have been forced into the gig or side hustle economy. Yes, 60%. The majority of real estate professionals out there are no longer just doing real estate. They're taking on side gigs, driving ride shares, freelance writing, anything just to augment their income, keep the lights on, and try to salvage their personal finances.
Section 3. A blueprint for associations.
So, knowing that agents are basically broke, working side hustles, and seriously considering canceling their memberships, what can associations actually do? They can't raise dues, and they obviously can't force houses to sell. The solution relies on what we call an ecosystem play. In an environment where raising dues is virtually impossible, delivering non-dues value becomes the ultimate retention strategy. But look, it can't just be a gimmick. Associations must deliver tangible, real financial relief directly to the agent to give them a compelling reason to believe in the value of their membership. Alleviating the agent's financial pressure is what prevents the expensive industry exits that are currently bankrupting the boards.
Think about the incredible return on investment here. This strategy works by leveraging financial technology and tax literacy services. For every $1 an association spends on these platforms, it puts $20 of tax-free cash directly back into the member's wallet. The cash provided to the agent more than pays for the association fees themselves. It completely transforms association dues from a painful, dreaded expense into an unparalleled symbiotic financial asset.
Section 4. Financial relief for agents. So how does this retention strategy actually translate into practical, life-saving tools for the modern side-hustling agent? Well, here is the real game changer. Through these ecosystem platforms, agents can legally extract up to $20,000 in tax-free cash out of their company or sole proprietorship. They can shelter commission income and create future tax shields for 2026 and beyond. When commissions are this exceptionally low, saving $20,000 in taxes is basically the equivalent of closing multiple deals. Actually, scratch that. It's not just savings. It is pure survival capital.
Improper financial structuring is more critical now than ever before because there's a rising, very urgent threat. Tax authorities have dramatically increased their auditing activity, specifically targeting real estate agents in the gig or self-employment economy. Because so many agents are now juggling mixed income streams, a little bit from real estate, a little bit from varied side hustles, they're inadvertently waving massive red flags at tax agencies.
To solve this ecosystem crisis, the apps provided by these associations act as an all-in-one safety net. They help agents shelter those commissions and prep for audits. They tackle financial literacy to alleviate that massive mental health burden we talked about earlier. And vitally, they provide labor law and expense management support specifically for the 60% of agents who are relying on side hustle income. It keeps them compliant and it keeps them afloat. It directly addresses the messy daily realities of the modern agent.
Which leaves us with this final, incredibly provocative thought. If a staggering 60% of real estate professionals have been pushed into the gig economy just to survive, are they still real estate agents doing side gigs? Or has the market shifted so profoundly that real estate itself is now the side hustle? Honestly, how associations choose to respond to that question is going to determine the future of the entire industry. Thank you so much for joining me for this explainer. I really hope you walk away with a totally new lens on the reality of the real estate market today.